Hello again, fellow BeachBum traders. Thank you for joining us for part one of our series of videos on how to make money trading in bear market, wherein in this video we will share with you a compilation of various trading strategies, trading ideas, trading techniques on how to make money trading a bear market. So stick around throughout the video. Again, we'll share with you a compilation of a variety of trading strategies, trading ideas, trading techniques on how you can make money trading a bear market. So let's get started. Okay, firstly, I just wanted to share with you an article from Investopedia, and I'll include this link in the description box below to bull and bear markets. Just you can read this in more detail for yourself, but just so we have a good idea of what we're talking about when we're talking about a bull versus bear market. And you can see, a bull market is essentially a market going up, the economy's sound, whereas a bear market is when the economy is receding and markets are declining. Now we'll talk about, I'm not sure we're actually in a bear market, but we want to talk about our strategies on how we can make money in a bull or a bear market. And we could talk, you hear the terms bearish and bullish, so here's how those are defined. And you can see, a bear market could be more dangerous because of decreasing prices and volatility. We've certainly seen increasing volatility this week, and we've seen, steadily decreasing prices this week, and we've seen a significant reduction in the indices. So again, you can read this in more detail. Bear markets when in decline, typically they define it if it's 20% below its recent high. So again, I think we've reached the 20%. We're somewhere in the 15 to 20% decline range. Whether or not technically we're in a bear market, I don't think that's as important as how do we make money in the various markets. Another important thing to find in here is a nice graph as to the length of the bear markets and then the length of the recoveries for the major declines. So again, you can see, and the drawdown. So how large was the drawdown in the market? And we can see, February the drawdown was 34%. Obviously the recovery was very quick, so the bear market was very short. I think they say it was the shortest in history. And you can see, we haven't technically had a lot of bear markets in the 2000s, 2007, 2000, etc. So again, you can find more information, the characteristics, psychology, etc. And also, how to play these things, what to do in each market. During a bear market, you could see continually losing value, so decreasing prices steadily, a lot of short selling, and flight to safety to defensive stocks. So you can see, utilities, things like that. So again, things to be aware of if we are in a bear market. Where does the money go? It goes to, defensive stocks, utilities, etc. So if you see a flight to those areas, and that's another indication that we might be in a bear market. So, and again, I'll leave this article. You can read it in more detail, but I thought that was helpful. Please let us know in the comments if you find this information helpful. Another useful tool I thought I would share with you, if you're not familiar with it already, is the Fear and Greed Index on the CNN business site. That is a gauge of the overall fear or greed currently in the markets. And you can find this link under the links section of our homepage at beachbumtrading.com, bum without the U. You can see we have a number of links, reference links, and you can find the link to the Fear and Greed Index as well as several of the other reference links and tools that we use. So we can see, although the markets were in decline, there was a lot of volatility this week, the Fear and Greed Index is still only sitting at mild fear. It's only 43 versus, a 0 is extreme fear. 100 is extreme greed. And you can see the factors in their fear and greed index, and put call ratios. There's still a lot of greed, junk bond demand, stock price breadth, and then where the fear is volatility. We've seen volatility. We'll look at the VIX in a second. Stock price strength is poor, so fear, and safe haven demand, so flight to safe havens, and momentum. All those are indicating fear, and you can see the oscillator, etc. So again, you can find this at any time in the links on our homepage. And again, if we look at the VIX just very quickly, we can see, although it did spike up briefly, it hasn't peaked yet. So we can see a steady increase in the VIX, steady increase in the volatility. Again, this is another thing they call the fear gauge, is the VIX, and it's really volatility. It's not necessarily fear, but we can see the recent peak is in the 32ish range, 3150, etc. So we haven't really seen this spike, which is the extreme capitulation, extreme fear. And we may well see this on Monday. Mondays after weekend tend to be volatile, increased volatility. We may get this gap up and spike. As we've mentioned in several of our past weekly trading game plans, we do have a buy out on the SVXY, which is the short on the VIX, sitting at the price for this spike. So if we do get this spike, we will catch a short on the VIX, because just by the definition and nature of the VIX, it retraces, it reverts to its mean, and so that's a very nice high probability trade, and a nice profit to be had. So again, if and when we see that spike, the other thing we'll talk about is we've got an FOMC meeting on Wednesday, Thursday, Powell press conference on Thursday. So if we can get that capitulation spike in the VIX, and then it reverts, we can make a nice profit on that. But again, we're not seeing extreme fear. I know it may have felt like it this past week, but the indications are, yes, there's fear in the market, yes, there's declines, but we haven't reached that extreme fear yet. So we may see this in the coming week. We'll talk about the economic calendar, etc., and some of the other factors that may cause that final spike in fear. But all of these say, we have potentially more downside to come. We'll look at the indices again in a minute as well. So the message is, be careful. We haven't necessarily hit bottom. The indications are that we have not yet hit bottom. So we'll look at some of the other factors that may indicate that. Okay, so what's our strategy for how to make money in bear markets? Well, one strategy I like, particularly if you're working in retirement accounts, is using ETFs, or leveraged ETFs. And you could see I have a watch list in my watch list tab in Webull, and I've constructed this watch list with a number of ETFs, that many of which we'll talk about today. And it's easy, quick and easy to create a watch list. You can have any number of watch lists. You can see I have a number of them, cryptos, etc. And in part 2, we'll talk about the bullpen. We'll talk about the weekly watch list, etc. But I have one that has all the ETFs that I like to watch. And again, these are ways you can play, bull or bear markets, and that's what I would recommend. ETFs also reduce your risk for single stocks. If just one reports bad earnings, that stock gets hit, but an ETF again reduces the risk. And I need to get more nimble at being able to catch these guys as they do reversals, start to run. I do have some additional automation now that will tell me when these are moving up, breaking out, but I'd like to get more automation that identifies reversals quicker and breaking down, moving down. But these ETFs are great for, again, if we're talking about a bearish market, these are all ways where you can long or short the indices. So the short version, if the market's going down, you see these short leveraged ETFs start moving up because they're inverses. So when the index goes down, the inverse goes up, and you can long these indices. Again, in a retirement account, you can't short any stock, etc. So these indices give you a way to play a bear market because you can long the inverse ETF, which is then shorting on the index. So here are the list of ETFs that you can long or short the major indices. The Qs to long is TQQQ, short is SQQQ. The ones we like for the S&P long is UPRO, UPRO, short SPXU. The Dow, up Dow, and short Dow, SDow, to long short the Dow. This should be Russell 2000. To long the Russell 2000, it's URTY. To short the Russell 2000 is SRTY. And then the VIX, you've heard us talk about a number of times to long the VIX. So when volatility starts increasing, and I know some people caught this and made a nice profit this week because the VIX was climbing. So if you were long UVXY, you made a nice profit. Again, when it spikes and peaks, we've got to buy out to short the VIX using SPXY. So again, if you, what I'm recommending in a bear market or really any market is if you can nimbly catch the swings in these leveraged ETFs, there are opportunities to make money. And in any kind of market, you just have to catch, which one's starting to run, and you can long that leveraged ETF and make money and just nimbly get out. Similarly, in treasuries, if you want to play the Treasury, the 20-year down, there's TFV. We've watched that. We've played that in the past for leveraged ETF down on the Treasuries. So that's down on price, up on yield. If you want to play them up, and we are looking for a bottom in these Treasuries. Once this hits bottom and starts swinging up, we're probably going to long Treasuries. So to long the 20 years TMF, to long the 7 to 10s is TYD. We also talked about global markets. You've seen some major swings in China recently. They loosened some of their mortgage, etc. restrictions, and it started to climb. We don't like individual stocks in China. Again, I think the political situation is very volatile. But again, this allows you to mitigate some of that single stock risk, etc., smooth out some of the risk. When China starts running up, you can use YINN, yen, to long China, and you can use yang to short China. So again, as these volatility events occur in China, there are opportunities to make money if you can nimbly jump on and long short China. India's been doing very well, and I've recently been turned on to the long in India. It is running up. We would like to get an opportunity to go long India. We will be looking for other global indices. I expect over time, if the U.S. markets continue to decline, people are going to be looking globally, and you're going to see money start to flow to other global markets. So we'll be looking for opportunities in other global markets. But again, these are ways you can play at least some of those. Commodities, the ones we've talked about most recently, is longing and shorting natural gas. You can long natural gas using boil, short using cold, long oil using gush, short using drip. And again, you can play these swings going both ways. We need to be more nimble, and when these, when our long and boil rolled over, I should have gone short cold. I didn't catch that. Same way with oil. When our drip got stopped out, if it looked like it was going to keep going down or turning back up, we could go long gush. Here's another ETF that is recently developed to be an inverse to short the ARK Invest Cathie Wood's ARK-K ETF. So essentially, this SARK is shorting the ARK-K ETF, and you saw, the ARK-K had a major decline. If you were then long this SARK ETF, then you made a lot of money. recently. I guess there was a short bounce in ARK-K, but I think it declined further on Friday. So again, I think those are good strategies. Well, again, you can make money in a bull market. You can make money in any market. It's just a matter of identifying the current trend, being ready to jump on, knowing what are you going to play if the markets start going down, then what are you going to jump on and ride that down. When it reverses, you jump off and you can play it the other direction. So again, we can make money in any kind of market. Bull markets, bear markets, range-bound markets, you name it, there's a way to make money. So I hope this all helps, gives you a strategy to make money in a bear market, or again, in any kind of market. And now we're even talking about global markets. So we'll look for more opportunities in other types of markets as well. So I hope that all helps. Please let me know your thoughts in the comments below in our Facebook group. We hope that you like this video. Please smash the like button so that the YouTube algorithm will share this video and all of our videos with more of your fellow BeachBum traders. Please share it using the share button. And if you're not already a subscriber, we hope you will choose to subscribe and hit the bell icon to be notified as we publish additional videos. We hope you'll come back for part 2 of our weekly trading game plan tomorrow. We'll talk about changes to our watch list and any additional strategies that we come up with tomorrow. So we hope this all helps. Good luck and have a great trading week. Okay, so let's talk about some strategies. How do we make money in a bear market or a downtrending market, or at least protect our portfolios, our capital? And a message I just want to send, and in reality this is one of the primary reasons why we started this YouTube channel, all these videos, etc., is to share our experience and hopefully help people make money, not lose money, etc. And one of my primary messages to people is don't panic. And again, we're not financial advisors. This is not financial advice. This is our opinion, and this is for educational purposes only. But again, one of our primary messages is don't panic, don't overreact in either direction. And a message that I've always tried to send too is you only actually lose money when you sell at a loss. If you're still holding a position, if you still own the stock, you haven't actually lost cash yet. You lose when you sell. And if you're just another one of my primary messages, and you'll see this in social media if you catch me in a chat room or whatever, one of the things I post a lot is patience pays. So if you wait, things tend to turn around. They tend to swing back up. If you don't panic and sell at a loss, and eventually you'll at least recoup your capital, if not make money. More often than not, you end up making money. So again, just a message, don't panic, be patient, etc. Again, I think last week we talked about the fact that if you were stuck in one of these life cycle mutual funds in your 401k and you had the opportunity to move that to cash, that probably was an opportunity. Well, my opinion, again, this is just opinion, is now is not the time to liquidate one of those mutual funds, because they're probably down, 5, 10, 15, 20%, and that's what we have seen. We've been through the internet bubble of the 2000s. We've been through the Great Recession, 2008, 2009. We've been through the pandemic, and where people really get hurt. And again, this is what we're trying to do with these videos, is keep from people getting hurt. Is when they panic, they sell, then that they lock in that loss. And that's where people lose, 30% of their 401k, and that hurts them financially. And we don't want to see people get hurt. So again, I just want to convey that message. Don't panic. Be patient. The markets do eventually recover. You can see in part 1, we talk about how long these bear markets can last. Sometimes they're short, sometimes they're longer, but again, if you're patient, eventually they have always recovered. Now, when we talk about longs, again, we're not rebuilding a lot of our bullpen right this second, but in a second we'll talk about, how do we rebuild our shopping list, rebuild our bullpen. We're waiting for the extreme, the peak fear, and again, in part one, we looked at the fear index, and we're not there yet. We need to wait for that capitulation, that peak fear, that bottom. Nobody's going to know when that is. You're going to know after it happens because it's going to bottom. You're going to see that capitulation spike down at high volume, and then you're going to see a turn back up. Now, how long that takes, again, nobody's going to be able to say until after it happens. So how do we make money? Well, okay. Essentially, we need to flip our mindset. Instead of looking for longs where we're bottoming and turning up. We want to flip our mindset, and how can we make money as things peak up. We're going to see some rebound rallies, and they're probably short term, but then things are going to trend down. If we're in a downtrending market, we need to be looking for those peaks and then going essentially short, right? So, flip the charts, flip your mindset, and start looking for, okay, when things peak on a short-term rally and turn down, then how do you play those on the downside to make money? And there's going to be plenty of opportunities along those lines for shorter-term time frames. Again, you can do swings, down to up. So when it turns down, you go short, essentially. And you wait for it then to bottom, which would be the inverse of a peak, and then you get back out, right? Because it's going to rebound. So again, you make money. We can make money in any market. It's just a matter of mindset, direction, knowing how to play. If you're a day trader, a shorter term trader, you can do this on a scalping method. You can look for downside momentum, and again, you can short going down. You're looking for a momentum and increasing momentum going down versus where people have been conditioned in the past couple of years looking for momentum and breakouts going up. Now you want to look for momentum and breakouts going down. So again, you just flip your mindset, play it the other direction. If you got to flip the chart upside down, that's one way some people do it, and it works. It's the same patterns, same strategies, etc. It's just the other direction. In part one, we talked about these inverse ETFs. Now, if you're in a retirement account, you can't short individual stocks, but you can use these leveraged ETFs to play indices. You can play. We talked about how to play the indices going down. We talked about commodities, the treasuries, global markets, etc. So again, we can use all these strategies going on the downside using these leveraged ETFs in a retirement account. So I hope that helps. It gives you some strategies. I hope it gives you some peace of mind. Again, we can make money in this market. We just have to flip our mindset. Don't panic. Be patient, etc. Use these strategies. Flip our mindset. We can make plenty of money. Now in a second, we'll talk about, okay, what is one way we can rebuild our shopping list, etc.
Now I wanted to talk about the concept of beta. I don't know how many of you are familiar with what beta means or how you can use it to profit in a down market or, again, in an up market. But in this particular case, I want to show you how this strategy can be used to profit in a down market like one that suffered from the September effect. This is an article in Investopedia, and I'll put a link to this article in the description box below that defines and explains what beta is, how it works, how it's calculated, etc. But the point I wanted to make here is to talk about a negative beta value. And you can see in this article it defines a negative beta value, meaning that a stock is inversely correlated to the market benchmark. What that means is when a market is going down, these stocks tend to go up, and vice versa. When the market is going up, these stocks tend to go down. They also point out that certain things have a tendency to have a negative beta. Obviously, inverse ETFs are an inverse to the market or whatever, so they're going to have a negative beta. But they also point out gold miners tend to have a negative beta. So something to remember if you're preparing for a down market, maybe gold miners is another area that you want to go long to hedge insurance or profit from a down market. Now, how do we find stocks that have a negative beta? Well, a quick and easy way is to use FinViz's stock screener. So if we go to FinViz and we click on the screener tab, quickest way I find is to click the All tab so I can see all the various criteria I can select and filter for, and there we see beta. So now I want to sort for a beta under 0. So that's going to be negative, right? So now here's a complete list of all the different stocks that have a negative beta. And I can sort these if I want by industry, if I want to focus on particular industries. So maybe I want things that have a negative beta and they're in aerospace because I know aerospace happens to be a trending stock, or I want apparel, etc. And you can see there's a number of pages. You can add additional filters to filter, okay, I want a positive price to earnings ratio, or I want a price within a certain range. So again, I just wanted to really quickly talk about beta, how you can use a negative beta to either hedge your portfolio or even profit in a down market. And you can pick those stocks for sectors that have current trending themes, are cheap or relatively cheap, stable, etc. So again, the negative beta, there are stocks out there that have a tendency to go up even though the market is going down. So look at the stocks you might be interested in that have a negative beta, and maybe that's something you want to go long in September due to the September effect. I hope that helps.
Okay, I also wanted to talk about another strategy that if you want to play individual stocks, either on the downside or another way to reduce the volatility in your portfolio is by using beta. And we last talked about how to find individual stocks based on beta back in September. You can see our video back from September, how to profit from the September effect, where we walked through how you can use the FinViz screeners to find stocks with various beta values. So I'm not going to repeat that process here, and I'll leave the link to this previous video in the description box below, and maybe I'll cut that piece out and do a standalone video in the future. But please go back and see how you can find stocks based on beta in FinViz from that previous video. So why would you want to look at beta? Well, let's just talk about how beta works. If beta is positive, then it's going to move in the same direction as its market or index. So if markets are going up, the stock goes up. Markets going down is going down. So again, positive beta, it moves in the same direction of the market. Now, if we're talking about retirement accounts where you can't directly short individual stocks, then in a downtrending market, we want stocks that are more likely to go up when the market goes down. Well, then we want to look at a negative beta, because a negative beta says it moves in the opposite direction of the market or index. So in a downtrending market, a stock with a negative beta is more likely to move up. So again, now you can take a long position on a stock that's more likely to move up when the market's moving down. So again, you can see our video. Here's how to find stocks that have a negative beta if you want to find individual stocks to watch that are going to more likely move up when the market's moving down. Now, another useful factor of beta is you can use this to reduce the volatility of your portfolio if you would like, because If a stock has a beta that's around 1 or greater than 1, it's going to move faster than its index, and this is the absolute value, so positive or negative. If it's greater than 1, it's going to move faster than its index. If it's less than 1, it's going to move slower, so less or slower than its index. So again, if you want to reduce the volatility in your portfolio and you want to find some stocks, individual stocks that are going to dampen the volatility in your portfolio, you want to look for stocks that have a beta absolute value of less than 1. The smaller the beta, the less it's going to move as the index moves. So again, we hope this helps. Beta is, again, another way you can use individual stocks. You can play either direction. You just know, what value of beta are you looking for, and then what's the absolute value, the magnitude of the beta. Do you want something that moves faster than the index or something that moves slower? Obviously, if it's got a greater than 1, it's going to be more volatile than the index. If it's less than 1, it's going to be less volatile than the index. So again, this is another strategy, allows you to adjust the volatility in your portfolio. If you want to reduce the risk, reduce the volatility a little bit, you can tune the overall beta of your portfolio. And there's even funds, and I don't know, there's probably ETFs that are high beta, low beta, etc. That focus on these factors. So we hope that gives you another strategy to use if you want to play individual stocks in any market, down, up, bear, bull, etc. There's ways to make money in any market. That's one of our primary messages. We hope this all helps. We hope you like this video. Please smash the like button to help the YouTube algorithm. Share this video and all of our videos with more of your fellow BeachBum traders around the world. If you're not already subscribed to our channel, we hope that you will choose to do so. Please ring the bell icon to be notified of all of our future videos. And please share this video with your fellow traders around the world. And again, let us know in the comments below these videos, what do you think? How else can we help you be successful in your trading? How can we improve our videos? Let us know how we can help. We are here to help. So we do hope this all helps. Good luck and have a great trading week. So how do we make money while we're on Mr. Market's wild ride and in this bear market? So let's talk about some strategies about how we can make money. Some things I want to point out is, in general, markets hate uncertainty, and there's a lot of uncertainty. Although the fear gauge really has not spiked, we're still not in extreme fear, which says there's still an opportunity for a capitulation bottom with extreme fear, and a lot of people are waiting for that extreme fear to call the bottom. Again, you often won't be able to tell that we've hit bottom until after we see it. We saw one quick wick down, spike down, but we can expect until we hit that extreme fear, extreme capitulation, we won't know that the bottom's there, and it'll probably be retesting that previous low with probably more volume, more certainty. There's a lot of uncertainty factors. We've been saying for a long time, inflation's still hot. Powell is now confirming that and is now concerned about that. So that's going to drive the Fed. But again, the Fed's actual actions are still an uncertainty. They haven't given us an actual plan. They just said what they're likely to do. We know there's interest rate hikes. We don't know exactly when. We don't know exactly how big. Everyone expects 0.25 starting in March. We expect that. Liftoff is going to be a jarring event. It always is a jarring event when they go from 0 to the first rate hike. We can expect a downside reaction when that happens, even though everybody knows it's coming. It's almost always a jarring event. So then we also have the Russia versus Ukraine. A lot of traders I'm talking to are awaiting what actual sanctions are going to be imposed. We kind of expect they're going to sanction Russian oil. That's more of a political move than an actual economic move, as Russia can trade their oil to China, who's one of the biggest consumers of oil. And Russia and China are now in cahoots, so we could talk about that in more detail, and what that may mean. So again, how do we make money in Mr. Market's wild ride in this kind of bear market? Well, one factor is this is a great trader's market, right? We're getting these daily swings, high to low to high, etc. And if you can catch those swings, then you can make money. You just have to be nimble and play them. When things start to decline, you ride them down and then get out when the bottom's in, and then play the swing back up, just like a roller coaster. And in last week's weekly trading game plan, we pointed out a whole list. So here's that video, how to make money in a bear market. If you go to the description box of that video, you can see a whole list of leveraged ETFs that we listed here for your benefit. So please refer back to that, of how you can swing low to high on any of the indices, the treasuries, the major global markets, and some of the commodities, and even how you can short ARK-K, so you can swing ARK-K going both ways. So again, please refer to this list in the description box of last week's weekly trading game plan titled How to Make Money from a Bear Market. Again, I'll leave the link to this video also in the description box below for your reference. So again, I hope that helps. Again, this is a good market for traders. If you're an investor, long term, it's painful, right? Because things are going to be declining. So day trading again is great. You get these highly volatile swings. There's great opportunities for day traders, options traders. The high volatility increases the IV. The implied volatility increases what options traders can make. So again, those are areas you might want to think about if you are already wanting to learn swing trading, day trading, etc. Options trading, those are opportunities. Again, this is a painful market if you're trying to be a long-term investor, because things are declining. They're swinging down. It's tough for a swing trader because, again, things are going to swing down. You're going to see a lot of red if you're doing a longer-term swing. Now, shorter-term swing, great, because it's a roller coaster, right? You just got to be nimble, ride it up to the top, sell, ride it down to the bottom, sell, buy. So buy low, sell high, sell high, buy low, right? And there's a lot of money to be made. So we hope this all helps. We hope you'll come back tomorrow for part 2. We'll talk about our watch list updates, additional strategies, etc. Please let us know in the comments below what you think of this weekly trading game plan. How can we improve? What would you like us to talk about more or less, etc.? And how else can we make you help you be successful in your trading career? We hope you like this video. Please smash the like button. Help the YouTube algorithm share this with your fellow BeachBum traders around the world. Please share this via the share link. Please click the bell icon to be notified as we release additional videos. And if you're not already a member to our BeachBum trading community, we hope you'll choose to subscribe to our channel by clicking the subscribe button. So again, we hope this all helps. Good luck and have a great trading week. First, as a reminder and then an observation, please recall that in our weekly trading game plan video from last week and in part 1 of this week, from last week, how to make money from a bear market, we have a list of leveraged ETFs that you can use to long or short the major indices, treasuries, global markets, etc., commodities. We'll talk about those a little bit, but in this bear market, choppy, range-bound market, playing these leverage, either swinging, day trading, breakout trading, these leveraged ETFs is probably going to be your best opportunities, particularly if you're nimble and you can play these on the rides up, or if it's a decline and a bounce, you can use these leveraged ETFs if you can catch these reversals. These are probably the best opportunities in the current market to make money in the short term. So again, I'd highly recommend you review those. We're not going to reproduce them right now. I did put them, I believe, in our Facebook group, our BeachBum Trading Facebook group as well, so you can reference them there as well. Another observation that we saw this week is even though oil spiked up and natural gas spiked up briefly, we didn't see necessarily the spikes in the leveraged ETFs, gush and drip, and boil and cold exactly match the spikes in the commodity prices or the commodity future prices. And the observation is that's because these ETFs are not directly correlated to the price of the commodity or the futures. They're comprised of individual stocks or companies that are exploration. So gush and drip are oil exploration, oil and gas exploration companies or stocks, and boil and cold are natural gas stocks and companies. And so if those individual stocks don't move exactly at the same time as the commodity price, then these leveraged ETFs don't move. So again, there's not a direct immediate correlation between the commodity price and the movement in these ETFs. They don't necessarily top and bottom at the same time to the same degree. Again, we saw Chevron had an impact on gush not reaching a peak and drip not reaching a bottom at the same time that oil spiked up over 88. So I wanted to make you aware of that observation, that even though we see the commodity price spike up or down, these ETFs may or may not move up or down at that same time, and they may peak or bottom at a different time than the commodity price. There is obviously a correlation, but it's not a direct immediate correlation. So I wanted to make you aware of that if you didn't already know that. So I hope that helps. Thank you again for watching our part 1 on our series of videos on how to make money trading a bear market to the end. We hope that you found these trading strategies, trading ideas, trading techniques on how to make money trading a bear market helpful to you. We hope that this will all help you succeed and make money in your trading career. Please let us know what you think about all of these trading strategies, etc., on how to make money trading a bear market in the comments below, in our free Discord, for which you can find an invite in the description box below, in our Facebook group, via our social media sites, etc. And again, please subscribe to our BeachBum Trading YouTube channel. Please hit the bell notify icon so you're automatically notified of subsequent videos in this series on how to make money trading a bear market. And again, let us know your thoughts. Let us know if you have any other trading strategies, trading ideas, trading techniques on how to make money trading a bear market, again in the comments below, in our free Discord, Facebook group, social media sites, etc. So again, we hope this all helps you to make money trading bear markets, bull markets, etc., and succeed in your trading career. Good luck and have a great trading day. The content of this video was produced by BeachBum Trading. We hope you will choose to also join us in the BeachBum Trading community and subscribe to our YouTube channel. Visit us at our homepage at beachbumtrading.com, the bum without the U. Similarly on Twitter, BeachBum Trading, bum without the U. On Facebook and in our BeachBum Trading Facebook group. Please follow us on Pinterest and on Instagram. All of the links to our social media sites will be included in the description box below, and we hope you will choose to subscribe to our BeachBum Trading YouTube channel and follow us on social media. Thank you. We also cordially want to invite you to our new BeachBum Trading Community Discord server, where we can have discussions on all topics related to trading, success in trading, investing, etc. You can see alerts when we make trades, changes to our watch lists, etc. So again, please join us in the new BeachBum Trading Community Discord server. You should be able to find a link in the description box below. You can also find a link in the social media category on our webpage, beachbumtrading.com, without the bum without the U, and also in the link section on the About page of our YouTube channel, etc. So again, we look forward to seeing you in the BeachBum Trading Community Discord server soon. Wave and say hello.
BeachBum Trading also now has a site on Patreon. If you are willing and able to help support our efforts to produce all the content and help you achieve the financial freedom you want, deserve, to be able to live the beach bum lifestyle or any other kind of lifestyle you would like, and you're willing and able to help support our efforts in these regards, we hope you'll choose to visit our Patreon page. You can get access to our new BeachBum Trading Community Discord server, which is currently under construction, but you will get access to the Discord server by supporting us through Patreon. Again, this is all currently under construction, but you can see we just have the default levels, membership levels, but again, each level allows support, allows access to our Discord. We're also posting our trade positions initially in our Discord, and again, we greatly appreciate any support that you're willing and able to provide. So thank you for your consideration.
Another way that you can help support BeachBum Trading and being able to produce frequent quality content for you for free on YouTube, etc., is in addition to subscribing to our BeachBum Trading channel, hitting the like button on our videos, and hitting the notify so you're alerted when we release further videos. You can also choose to show your support for BeachBum Trading with a super thanks, which you can find below this video. If you hit the heart with the $sign, the super thanks, again, you can financially support BeachBum Trading in whatever amount that you wish, and we greatly appreciate your support, and that will help us, again, be able to produce frequent quality content that we can provide for you and all your fellow beach bum traders around the world for free on YouTube. So again, we greatly appreciate all of your support, and thank you very much. Thank you again for watching our video. We hope that you liked it. If so, please smash the like button, give us a thumbs up. If you're not already subscribed, please consider subscribing to our BeachBum Trading YouTube channel. Please share this video with your fellow traders and friends. And please give us your feedback and any recommendations for improvement in the comments section below. And let us know what else we can do to help you in your trading career. Thank you again, good luck, and have a great trading day. If you like this video, we hope you will choose to subscribe to our YouTube channel by clicking on the box in the upper left-hand corner. You can watch another video like this by clicking on the box in the lower right-hand corner. And we have a whole playlist of videos like this that you can access via the box in the upper right-hand corner. Our latest video is available in the box in the lower left-hand corner. We hope you like this and have a great day.